Welcome to The Growth Show with Matt Lenzie, where we discuss growth strategies both for business and a personal perspective, discussing all kinds of businesses, growth strategies, technology, investment strategy, and much more. We are meeting with entrepreneurs, investors, app developers, and property developers. Our vision is to help 10,000 business owners grow their businesses. Introducing our host, Matt Lenzie. Matt is a former banker and corporate financier. He now spends his time building his own companies organically and through acquisition, as well as raising capital for other businesses. Matt works with a wide variety of entrepreneurs and investors.
Welcome to The Growth Show. Today's guest is Mr. Neil Fillary. Welcome, Neil.
Hi, how you doing, Matt? Good to see you.
Slight pause there, considering things.
No, I just spoke, so
maybe it's just a bad internet connection. No, it's fine. I'm joking. But welcome.
You've got to improve your Wi-Fi, Matt. You've got to improve your Wi-Fi. I know you live out in the country, but you've got to improve that Wi-Fi.
I know this is the challenges of modern technology and living on a farm. The two things don't mix. But here we are.
Exactly.
Here we are. Nice to have you on, Neil. And I'll refer to this one as one of the lost archives, the lost tapes, if we call it that. And you know why, and I know why. But we'll keep that as an inside joke. So here we are, and so we've known each other for 6 years, something like that, kind of that period of time, and we got introduced by a mutual friend a few years ago. I'll let you kind of give your narrative, but the area that you and I are going to talk about today, in addition to your kind of background and experience, is the kind of crypto world and what's going on there. And obviously, over the last couple of weeks, we've seen all-time highs in terms of both Bitcoin and Ethereum. And it's a rapidly evolving world with, layer 2 protocols on Ethereum coming out and lots of activity happening. But we'll get onto all that good stuff shortly. But first, if you could just provide the listeners with and viewers as well, because we're going to put this on YouTube as well, with a bit of narrative in terms of your background and how you got to do what you are doing today. That'd be most appreciated. So over to you, Neil.
No, great, thanks, Matt, and it's a pleasure to be on your show. So my background is a combination of working in sort of finance and technology. I spent 15 years in the investment banking world, starting post-graduation in 2001, and rode through the sort of crisis and had a few senior roles within JP Morgan and Deutsche Bank, across multiple assets. So looking at sort of the entire securities and derivative space, supporting hedge funds and asset managers and that kind of thing. And then did a stint in asset management before I left in 2014, to set up my own advisory company. And that was really driven by, having been in the asset management world for a while and looking to see where there's alternative investment opportunities to get, high net worths and family offices and some institutions access to interesting institutional grade opportunities. And that varied across asset classes. And of course, my passion remained within, finance and tech, having seen the sort of the disruption and change through the banking world, where technology became even more reliant over the years. Things like co-location, DMA trading, so direct market access, getting the best execution for traders, right the way through to the research tools, analysis, settlement tools. All these technologies were bubbling. And then when I left JP Morgan in 2014 and was sort of looking at a whole bunch of different things, I discovered through a sort of mutual friend who I'd been trading with at Deutsche Bank for some time. We used to trade emerging market equities on the old Deutsche Bank prop desk. That was pre sort of Volcker rule time, where the banks could trade risk on their own book. Bitcoin. And it was more out of curiosity for him, I think, than anything else. He sort of saw, you know, academically and intellectually, he found that the technology itself was very, very interesting for him. As a, you know, he started in tech. I met him at Deutsche Bank in finance, and you know, we then sort of converged back and met and decided to work together again. But yeah, so he'd always seen the value of technology. He built out a lot of systems within businesses. I'd done a lot of work in, you know, enhancing technology across the multi-asset prime brokerage space and custody space, etc. So we came together, and I didn't dismiss Bitcoin, but I looked at it and thought, well, yeah, that's interesting, but it's not really going to move any needles at that time. And you know, he'd been mining Bitcoin as early as 2010, so he'd been an early adopter and got in the space very, very early. But fast forward, we decided to consult in and around the space to see and explore where we think this technology could go. And he was running some blockchain projects, and actually we then formed a business together, and we started to consult. As part of that group, we contributed and or invented a lot of technology around the early altcoins in the space. So the way I describe altcoins is really anything other than Bitcoin. Bitcoin was the first, you know, big cryptocurrency that came on board, considered like a digital cash, but what does it really mean? And since then, it's had a number of sort of comments in the market about what it really represents, what is its value, how does it operate, what is the blockchain, and all these questions kept coming out. So with his sort of core technical background and myself on the finance side, we decided to start a business called Shuttle. And we created vehicles and got invested and started to explore where we saw the big disruption in, you know, financial infrastructure, and actually more broadly beyond finance and in other sectors as well. So, and the blockchain technology really became a focus for us. We launched a hedge fund in 2016. It's a CFTC. Has CFTC oversight. It's a commodity pool operator out of the US. It's NFA approved, and it runs a strategy to get exposure to publicly traded crypto. And that's been very kind because of the asset appreciation. And I don't think anyone really thought how much it could grow so fast. And I think it's now more recognized. I'm talking about Bitcoin here just for a second, as a true asset class that people are paying a lot of attention to now. So we also got invested directly. So we take early exposure to projects and businesses, whether that's equity or token based, and that's through our venture arm of our business. So we invest our own principal capital very early on. So we're the sort of seed or early stage type investors, and then we go up to sort of Series A, and then we allow that to then be taken on by other VCs and other investors, and they get the exposure. But we often help a lot of the companies, so we may go in and put a team in, or we may help on the sort of software development or coding side, or we may help on the business side a little bit. So we add value by actually inserting ourselves in the business and becoming sort of co-creators, co-founders, and start to grow those businesses from there. And that's been you know, a successful venture for us. We've moved into various different areas, but we try to keep to a core of our understanding. Of course, my background is in the finance side. I like the fintech opportunities and are where I see most value. Things like infrastructure, exchanges, custody, looking at core sort of, you know, picks and shovels really that are going to build the new tools to run the new financial system. And only yesterday, I think in an article or a news feed came out that Jamie Dimon is also, you know, head honcho at JP Morgan has really starting to realize the disruption of tech in the banking industry on its own, and how that's changing the old models of banking. And this all comes down to, I think, one core thing around centralization and trust, right? So you hear a lot about DeFi and decentralized protocols, but this decentralized finance component there's a lot of technology around it, but quite simply, I think there are core aspects where if you can move value from you and I peer to peer without centralized counterparty clearing it, or too many interventions in between, that then becomes a bit more efficient, and you take the control back, and you don't have that delay or perhaps that inefficiency that can occur through centralized authorities. But of course, remaining compliant and remaining secure not fraudulent and all these types of aspects, these need to be considered in any business, let alone whether it's a regulated or unregulated activity. So we tried to put the right principles in place, having been a regulated person in this space, and we've seen that kind of change move on. So Shuttle has created these vehicles that can operate in this space, and we're looking to grow these companies, and that's really how I switched from sort of core finance, having been in large institutions supporting the buy side for many years, and then looking at the way in which these technologies are moving. And we've seen it from countless examples. I mean, I could list 100 examples. You've got PayPal, who are looking to integrate blockchain technology to support their payment rails and accept Bitcoin. Tesla, you can maybe buy a Tesla car with Bitcoin now. I mean, 4 or 5 years ago, you couldn't go and utilize Bitcoin as much as you can today, and some of the other cryptocurrencies. And there's a very interesting shift, a paradigm shift that's going on in markets today, where this new age of value transfer and finance is really descending upon the entire economy, actually, in my opinion. So these are exciting things. They're interesting. And we've looked at things that overlay blockchain. Again, you can't just put blockchain everywhere and say it's the answer to everything. There's interesting aspects of the technology, around immutability of record, using blockchain for provenance, using blockchain for transference of value. But there are still challenges, and this is a technology that's still growing and evolving over time. But I think it has very, very interesting properties and use cases across multiple sectors, and it's an exciting space to be.
Absolutely. And I think when we first spoke about this, must have been 2016, around that kind of time, you kind of convinced me that this was something that I should be looking at, both from a personal perspective and also potentially from a business perspective, albeit at that point in time, I didn't really have any kind of ideas around that. And I think the way that you kind of explained how a blockchain works and the usage of smart contracts, particularly on the Ethereum blockchain, I think for me, that was one of those, you call it those light bulb moments. And for me, that was one of those light bulb moments where I thought, potentially this has the kind of opportunity to transform the way that things happen. And I think it's probably fair to say that, since then, the kind of highs of 2017, it kind of went into retraction mode for a couple of years, and lots of this technology is advanced, and these new protocols have been built. And you mentioned decentralized finance, and obviously NFTs, non-fungible tokens, have obviously become big press news over the last couple of months as well. But what I'm, from a personal perspective, what I'm actually seeing is, and I'm a member of a newsletter called Bankless, and these guys are, I in a friendly way, describe them as super geeks. They're very, very interested in that whole thing of decentralization, not having to rely on traditional channels for banking services. And I think, the principles of what they're talking about are very interesting. I think it's a few years off yet in terms of actually that kind of practical application of, the crypto world converging and kind of coming across to what I describe as real world finance and transactions outside of it. Because what I see today is lots of people are using leverage to extend their capabilities in the trading that they're doing within crypto, which obviously generates revenue. So there's huge revenues that are being generated. And it's kind of, in some ways, it's self-fulfilling, isn't it? Because by introducing leverage, that increases the volume of transactions and the price points that some of the tokens are achieving. But I think, from my perspective, I believe that there will become a time where this crosses over, and whether it's with real estate or whether it's with motor finance or whatever, there will become a time where these things are managed through crypto. And the other one that you didn't mention, obviously, is that Visa are looking to settle using stable coins as well in the US. So they're using USDC, which is obviously on Ethereum as well. So I think for me, it's one of the most exciting things I've ever come across in terms of the potential opportunity and the practical applications of, where this could go, albeit it might not be the protocols that have been developed today. It might be new things that come in and, massively take over what's there today. So interested on your thoughts in terms of where you kind of see we are today in terms of the journey of this technology, and where you think that can go to as well.
Yeah, I think if we cast our minds back to when this sort of first came about, we had a group of people that were solving problems or mathematical problems in a network, and then when those problems got solved, they were given rewards, and that reward was in the form of Bitcoin, right? And we talk about these mining capabilities and how these are all produced, but ultimately, yes, you mentioned some interesting points there around either banking the unbanked or looking at alternative forms of finance. And millennials today, they like to operate, their first thought is through technology. That it's not, when you and I went to university, mountain schools, we just about had a mobile phone, and then we were moving into the sort of era of, computers are becoming more and more of a thing. But the big thing back then, if you were studying an economics degree, was to go into banking or to go into management consultancy or one of the big accountancy firms. It wasn't to think about going through a technology company and operating through there. And you talk about finance and how this has changed. You've got companies like Apple using Apple Pay, and Samsung. They're tech companies, but are operating financial services business almost, right? So we've got a change and shift in the way in which you can access, finance lending today. It's very, very different to sort of even 10 years ago. So there are many more participants on the market. And yes, I think there is obviously an air of caution around NFTs and the way in which they've sort of boomed back onto market, because obviously the concern there is, historically, if you look at the ICO boom, there was some nefarious operators and there were some issues around, and I think it's important to recognize that you don't want to be using some of these fronts from NFTs as a cloud over being able to move sort of dirty money. I mean, that's quite clear that you need to be very astute and be acutely aware that some of these activities go on. But that's like in any business. So yeah, I think there's great value in smart contracts. I mean, if we're talking about, like you mentioned, the tokenization of all asset classes, that evolution has begun, and I think it's going to continue to move forward. And I think you mentioned real estate, that's a prime, asset class, if you want to categorize it like that. That is, crying out for disruption across not only digitization of process, but also, placing, property value and determinants of a property in its entirety on a smart contract, and being able to trade that, move it around, change the ownership, and using blockchain technology that can become, much more efficient. There are, of course, other challenges around, it takes a lot of computational power to run some of these these chains and protocols. I personally would like to see other sort of alternative uses of energy coming in to be able to power some of this stuff, but right now that's not proving to be as positive. But I think that will come. I mean, trying to power some of these ASICs miners with solar right now is probably a little bit challenging, right? You have to have certain levels, but I think that's gonna evolve too. But yeah, I think the space is hugely interesting. The ability to transact peer-to-peer without the need for any kind of bottlenecks is bringing sort of ownership and control back into the end user, and not having to jump through perhaps 5 or 6 hoops to get anything done in the past. Whereas the world moves so fast now that it's quite clear to me that having that instantaneous transference of value is very, 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 very valuable. And I think with that, there are a whole bunch of projects out there that are focused on this. So yeah, we monitor it pretty closely and try and stay ahead of a very innovative curve.
Yeah, interesting. What I've also seen probably over the last year or so is that I think probably privately there were lots of people in kind of traditional asset management, investment banking, hedge funds, family offices, those worlds that were privately supporting this stuff and probably privately investing in it as well. But I think what I'm really beginning to see, there's a number of kind of public networks now of, you've got that guy, his podcast is called The Pomp, and he's Pompolino. He's an ex-hedge fund guy. You've got, there's a number of these people that are basically now publicly kind of going above the parapet and kind of putting their backing behind this stuff, along with, you've got obviously Elon Musk's and the likes of Mark Cuban and other, very high profile and wealthy investors. And, potentially there's a bit of, as they call it in the trade, shilling going on in terms of them, hyping things up after investing, but also there is some serious belief in this stuff now, which I think historically there was always, there was always that risk that the transactional value of it, basically went to zero and there was nothing left. I think for me, it certainly feels that kind of concern has been overcome in many ways. And whilst and it becomes, as you mentioned at the outset, more of a kind of traditional asset class with supply and resistance points, so the prices will fluctuate. But much like the US dollar will fluctuate based upon news and performance of the economy and stuff. So do you see, in your conversations with colleagues and other people within the industry, do you see that kind of repetition of, or is Elon being a madman just by, putting $1.5 billion into Bitcoin? Or is that reflected across, real world industry?
Yeah, I think there's several things there. I mean, to unlock. I mean, I think if you talk about, large companies' corporate strategy to get exposure to cryptocurrencies for an enhancement in yield, yeah, I mean, the financial markets today are not giving you probably the protection of what bonds used to give you historically, and also they don't behave in the same way, right? And you're also not getting the sort of, let's call it, fixed income or stable yield play from a bond. So what do? You go and look for alternative forms of income or yield, right? So I think, yeah, look, as long as you know what you're doing and you have a good understanding of the protocols and the space, because there are, I mean, 2,000 coins now. I don't know how many coins there are now. There's so many coins. I don't have time to look at all of them, but there are, you've got to know and understand a little bit about what these businesses are set out to do, right? And if you have that understanding, then you're a little bit more ahead of the game. But yes, I mean, we're seeing institutions, family offices, wealth managers looking at this. If they're not looking at it, they're doing something wrong. Their clients are demanding it, and they're also, realizing that it is an alternative asset class. And albeit some of the correlation in Bitcoin has changed quite recently, I think historically it's been, negatively correlated to other asset classes, and that brings a different risk dynamic to anyone's portfolio. And therefore, if the markets are tanking and things are going down, but this is sort of staying where it is, or even maybe going a little bit higher, that gives you a diversification and balance in your analysis of putting a portfolio together quite interesting. So, and of course, then you've got the properties behind it about what it can do with efficiencies in process and business, etc. So, yeah, I do see it, happening a lot in institutions where, and also the tools now to be able to operate in this space. I mean, if you even go back 5 years, the ability to, store these assets within a custody business, or the ability to be able to transact. Yeah, you had some good exchanges out there, but there was still problems. There was still maturing some of these exchanges. Of course, the more exchanges you have, that mitigates volatility. All the arbitrages that existed early on are starting to go away. There's actually quite an interest one in sort of yield generation and lending now that you and I have talked about before, Matt. So there's a lot of these opportunities, but there are a lot more tools. And also, if you don't want to have the onerous or the responsibility of self-custody and actually, going to the blockchain and buying Bitcoin, you can get access to Bitcoin futures now via derivatives. And actually a lot of large institutions prefer to do that because of their, it's under a regulated environment to get access to those, CME futures, for example, right? So yeah, there are now a lot more ways to access. It's a little bit more robust in terms of, I guess, the tools to be able to go and get exposure to the asset class. And that makes it a little bit easier for people to come in. But yes, we're seeing macro hedge fund managers, pivot in saying, there's a great play here to get exposure to this asset class in conjunction with the other stuff that we're doing, and it complements what they're doing. So yeah, it's fast moving, and we see a lot of upside here.
Cool. And quite interestingly as well, Michael Saylor has obviously raised a lot of money with his business MicroStrategies in the US. And my understanding is that he's actually going to turn that into an ETF. I don't know if you've heard that as well, which I think there's one in Canada that's got away, but yeah, it'd be interesting to see if that happens.
Yeah, I mean, I think there are at least half a dozen applications out there now, and ones that are pretty close to getting sign off for. the ability to run a exchange traded fund, passive vehicle, to get exposure to this space. And Mr. Saylor is always talking about, how can I buy more? How can I get more exposure to this? There's a limited supply of Bitcoin. He also looks at other cryptocurrencies or other alternative coins. So yeah, look, I think having these products to access for individuals and or whichever status of a client that you are, then yeah, it opens up a whole plethora of opportunity.
Yeah, and so where do you see this going then? So we've got to this point, and it's probably fair to say there's an element of maturity to it now. There's a bit more comfort that the bottom isn't going to fall out of it today. Maybe it will tomorrow. Kind of sod's law. But and we're seeing all-time highs in terms of some of the values over the last few weeks, as I mentioned earlier on. What's the kind of roadmap from your perspective to actually see this get integrated in the real world?
I think there are a lot of interesting companies and projects out there that are looking to implement what they've built on their technologies, whether it's a protocol, whether it's things like KYC and AML using blockchain, whether it's smart contract technology for business logic within a clearance and settlement system. There are companies like Digital Asset, R3. These types of companies are really progressive in their mindset around creating the new tools for finance. But in terms of where I think cryptocurrencies can go, certainly Bitcoin, because of its limited supply, there's a clear supply and demand mechanic within that particular, let's call it an asset class. Then that has value to any investor. Yes, there's volatility, but you can actually mitigate the risk and trade vol now, and you can actually use derivatives to offset some of these downside protection is a clear example. So there are more and more tools, like I said, to be able to enter into this space. And do I give predictions about where this is going to go? No, but I know that it moves, and I know that there's ways to trade around it to get the best value out of this asset class. But sure, I mean, could it go to $100,000? Of course it could, but could it drop a bit more? Yes. There are, some clearer technicals now that you can look at. Fundamentally, you can believe in components of the blockchain that sits behind it or not. That's an analysis that people need to take. And but yeah, certainly to ignore it is probably not the best idea.
And I think when we've spoken in the past, you've kind of alluded to the fact that, in your opinion, as part of a portfolio, investors should have some exposure to this, maybe in their pension funds or however their assets are allocated. Do you still maintain that position, or what's your view on the where we are today?
Yeah, absolutely, because it's at the very least it's a hedge against systemic risk, right? It's a macro hedge that you can play, because most of the other instruments that you get exposure to, okay, maybe not some direct investments that are not regulated, but most of the regulated world, they're up against other institutions. There's a clearing party in there. There's intervention from government. There's monetary policy stimulus coming from central banks. All these things are being driven by a central party or central authority, right? So the good thing about Bitcoin and some of the other cryptocurrencies is that it's not reliant on that, and it's a little bit different. So at the very least, it's doing something different to some of the other stuff. So that's the way I look at it. And would I advise someone to have a small percentage of their portfolio on, depending on their risk appetite? Absolutely. I don't think there's any harm in that. It's like saying, gamma risk in looking at investing in, a cannabis farm, or looking at investing in something a little bit more, esoteric. So I'm of the opinion that it can form part of an overall portfolio, but has to be risk managed and have to know what you're, or partner with someone that knows what they're doing in the space. It's like, I wouldn't go and look at forestry without taking a regional expertise and sector expertise in that space. I have no idea about that industry, but it could be a very interesting part of the portfolio, but it's not a world that I know. So I would take guidance and advice and partner. I wouldn't be trying to go it alone in Bitcoin if I know zero about it. I don't know if that makes sense.
Yeah, no, absolutely. Well, it's building your knowledge and finding the expert that can provide that guidance. And I suppose if people are, considering entering into this, what would are there those partners that can help you to build your knowledge? And if so, who are they and how do they work?
Yeah, I mean, one thing that I did, having looked at the space and kind of understand it from a business perspective, I looked at the academic side of it. So I would encourage anyone looking at this, read up on it is great, but you can read 1,000 articles, but go and actually, partnering up with professors or, individuals at universities that have been really focused on this and are really, digging into this very, very deeply, cryptographers, coders, mathematicians, engineers, these types of guys. I mean, I did that at Oxford, and that was something that I think is for anyone coming in new to the space would be a useful thing to do. Understand, where this originated, look at the fundamentals of some of these technologies and see, how it relates to you in the real world. And that I think is very valuable, understanding applications, use cases for this technology. And then that gives you a stepping stone to then look at all the other areas. So that would be one way I would say to get into the space. And I found that very valuable for me personally. Okay.
And in terms of your price predictions, I know you don't like to give one, but do you think, are you still long on the market generally, or how do you feel about things today?
Yeah, look, I mean, I'm broadly very bullish on the market. I still think there's a lot of growth and upside potential. New participants coming in always say to me, like, have I timed it right? I mean, is it, you can't time markets, by the way, that's very difficult to do. Timing a market is very, very difficult, no matter what asset class. And coming in and say, have I missed the boat? Should I get in now? The way I respond to that is that, look, things go up and down. You can still make money when things go up and down. However, is it too late? No, because this is still a growing technology. The internet took 30 years to come to what I call full adoption, full fruition now. And this is not too dissimilar to that kind of shift. So yeah, it's still got plenty of room to maneuver. Do I give price predictions? No. Could it easily go to 100,000? It could. Bitcoin, I mean. So that, these are, by the end of the year, we could see Bitcoin at $100,000, but it also could not. So there are a few factors that could affect this. There's a lot of big, what I call stimulus in the market today. There's a lot of money being pumped into the system post the pandemic, right? So look at recovery. So global markets are under this kind of perhaps a little bit of a false pretense, and having a lot of monetary stimulus into the market is making this a little bit more fragile. There's a lot of debt. I don't know. So there could be different factors that move this, but yeah, there's a lot more growth, particularly in the DeFi space as well. There's a lot of growth coming there. Smart contract blockchains like Uniswap and Chainlink. These are interesting. What they're doing is they're enabling, Uniswap, for example, is enabling you to move from one protocol to another in a decentralized way that sits above it. It's making this more efficient to be able to transact and move. So these types of businesses are interesting to me. I do like other things though. I think blockchain and Bitcoin and some of the cryptocurrencies in and of itself are hugely innovative, but they're also overlays. I like the fact that you can use blockchain with another interesting tech like artificial intelligence, for example. These are kind of interesting concepts and theses that I think should be looked at. But yeah, it can easily move more.
Yeah, I agree. I think there are challenges with particularly on Ethereum, with kind of congestion and gas fees and all that stuff. So the cost of transaction is, it's almost inexplicably high, isn't it? It's getting to the point where, you've got to be transacting a decent volume to actually make it worthwhile. And particularly if the transaction isn't successful, and then you've got to pay for the gas twice, which can quite easily happen. And I think, that kind of, burning of the gas fees, which EIP 1559, that protocol, which hopefully will be introduced in July, but it's looks like it's been approved. That should reduce the gas fees on Ethereum. And then obviously you've got the layer 2 protocols coming into effect, whereby you pay a transaction to get onto the Ethereum network, and then once you're into a particular token, then they use, what my understanding of it is, a layer 2 protocol that sits on top of Ethereum, and basically then you can transact within that for almost no cost or very limited cost.
Yeah, I mean, inevitably, Matt, there's going to be, and this happened in other asset classes in finance, there's going to be a contraction, and in fees there's going to be a compression, right, in terms of what you can. I mean, I remember when exchanges first came about, they were charging kind of ridiculous basis points to actually store and hold your assets. I mean, this is always going to compress over time. The earlier players like the Ethereum Alliance and ERC20 and some of the smart contract tokens in Ethereum, these all came about very early. But of course, it's a tried and tested platform. Yes, you've got to pay a bit more on the gas fees sometimes, and there are some bottlenecks, but they're improving that within their networks, and they're making changes over time. But there could be a new layer. I know a lot of companies that are bringing out their own, protocols that are, perhaps not, ERC20 or compliant similar, to those. So there are a lot, of interesting blockchains there. So, yeah, who's going to be the winner? Who knows? Right now, it seems to be that, 2 or 3 are doing pretty well. So, but yeah, any new, like you say, these are being developed, and new dynamics coming on, these second application layers that come in above the core protocol layer. Yeah, these are all interesting, new businesses that I'm trying to track.
Yeah. I mean, there's a couple that Optimism looks quite interesting, and Zika rollups as well. They seem to be getting some traction, albeit they're not actually live yet on mainnet. But yeah, when they come live, they could be quite disruptive to things. And I was watching a podcast with somebody yesterday, and they were, they've got a platform where they're providing leverage for trading, and they went live with their protocol. I think it's DYDX is their platform, and they went live with their secondary layer yesterday. So this stuff is beginning to kind of happen, which obviously will improve the efficiencies of things. Albeit some of these things do come with challenges. For example, one of them, you can't get your cash out for a week, which causes a bit of a problem. So yeah, there's going to be some challenges that come with it as it evolves inevitably.
Yeah, no, liquidity can be an issue if you're in a new issuance of a token or blockchain, and that depending on what the use case is, that can become a bit of an issue, right? But this is the sort of lessons learned in the sort of ICO boom. There were people investing into projects and businesses via an ICO offering, or a token offering, as it's known, right? And then, tokens never got launched, or there was some gaps in the business, or 2 or 3 of the guys left, or it's like anything. You've got to really dig in a little bit deeper behind the scenes to fully understand where these are going. Like any VC or private equity deal, the same thing. You've got to do your due diligence, and even then things can go wrong. So yeah, diversification is key, I guess.
And what's your views on? So you've obviously got the Binance Smart Chain, which is seems to be attracting a huge amount of interest and value at this time, albeit it's doing decentralized finance on something that's not decentralized. What's your view on that?
Yeah, look, I mean, companies calling them. I mean, if you talk to the libertarians and the guys that were around early on, and they even stable coins. That's not a real true cryptocurrency. If it's got a centralized component to it, one example of that could be, and has been spoken about, being something like Ripple. Is it a true crypto? If they've got value and they're operating the business, and they work for a particular business, then I don't see any issue with it. But the libertarians will tell you that it's not a true decentralized platform, and there's no, once you have any component like that in the middle, then it's not a real cryptocurrency. So they sort of dismiss it a little bit, but I can understand both sides. What I would say is that, we are still operating in a world where there are, centralized authorities, right? Governments, central banks, that's not going away anytime soon. So the ability to be able to operate and be nimble, using the greatness of the technology, or what you believe in the technology, but also abiding by, the way which things move around today. You've got to be cognizant of that. You can't just be, I'm up against all of the government's banks and leaders of the world, right? And central banks. That's not going to get you anywhere, I don't think.
There's an interesting kind of contrarian view that the way that this gets adopted is actually by potentially third world countries that adopt, some kind of digital token first, and then that almost leads the way. And there's lots of talk around how, for example, in Kenya, they've been paying for their bus fares on mobile phones for at least years, let alone maybe tens of years. And actually they're very used to, utilizing payment methods that, here in the West, we're just beginning to adopt now. Do you think that's a potential scenario that could play out?
Yeah, I mean, it's quite clear that, emerging economies and, these types of markets, perhaps smaller economies, it's a bit of an easier shift for them to move straight to this technology than perhaps it is for a larger, more mapped out economy, that has a lot of banking infrastructure and a lot of, other financial infrastructure. So yeah, for smaller countries, like particularly if the currency is a little bit weaker and it's not really playing its role as a, as an exchange rate mechanism and a currency, a sovereign currency, countries like Argentina and others, right, and that are looking for this. So if you can put a digital based currency or the technology in there a little bit more efficiently, they can jump to it quite quickly. So yeah, I see that being adopted everywhere. I think we look at emerging markets through our strategy pretty closely. That's something that we've got a business down in Brazil that we run and operate, which is it's directed at women entrepreneurs in finance, but it really has these concepts not too dissimilar from sort of the Facebook coin initiatives, where you're looking to give control and ability for communities and individuals to move value between each other and buy goods and services without the need of having a bank account. So it's harder to get bank accounts potentially in some of these countries. So that becomes valuable for enabling communities to do business and transfer value. So yeah, I think that the emerging economies will sometimes lead the way, and we're seeing this being adopted in many countries now.
Interesting times. And the other thing that I wanted to mention as well is the kind of the real world inflation levels and how inflation is tracked by CPI, but there's an alternative kind of school of thought on actually inflation levels are a hell of a lot higher than those reported in terms of actual equities prices aren't being factored into that kind of basket of goods that CPI and RPI use. And therefore, if you keep the same salary or get a bit of a pay rise every few years, your actual buying power is constantly being eroded. And there's some calculations on that show, kind of real rates of inflation around the kind of 8 to 9% mark. Firstly, what's your view on that? And do you think that's realistic? And secondly, do you think that utilizing alternative assets such as crypto could be a means of mitigating some of that deflationary power?
Yes, and yes. No, I think, look, yes, does inflationary periods and levels of inflation does erode into your bottom line effectively, right? That's going to happen over time. So the fact that Bitcoin as an example is an inflationary hedge potentially against some of these, this is, I do see value in holding that as an inflationary hedge, absolutely, because it's not impacted by levels of inflation or what a central bank authority targets or puts through, right? It doesn't. They have the ability they have tools to change things through fiscal or monetary stimulus. Things can change. Whereas with some of these alternative assets or levels of finance, it's not impacted by that. So yeah, I do see value in having that as part of an overall consideration of assets for sure. It makes perfect sense. And I think a lot of managers, a lot of fund managers and a lot of investment managers are looking at that and thinking, that's also a bit of an issue. So we all know that, if I'm going into economics here, and I don't want to go into economics, but wage inflation and versus, the cost of living versus, where you are in a particular country can depend on a whole bunch of things, right? But there's a lot of variables there. But yes, I think if you're smart and look at some of the indicators, there are ways to play these markets in the most efficient way. But yeah, I see it evolving.
Cool. And then in terms of Ethereum specifically, obviously we've touched on their kind of protocols that are forthcoming in terms of the gas fees hopefully will be reduced by the implementation of this new protocol that we've mentioned. And obviously this potentially makes Ethereum deflationary, which could potentially create some price pressure on it also, couldn't it? So, I mean, I'm personally, from my perspective, I'm quite bullish about, there's going to be some short-term pain over the next couple of months. I think there'll be some, divergence in advance of this. But I think once that comes in and people begin to grasp that fact, I think that it could absolutely skyrocket. And, I'm not asking you to, give a price prediction on it, but that's one potential outcome, right?
Yeah, no, for sure. Look, I've always said that if there's utility and value in enhancing or changing the way we do business for the better, that's always going to be something we're going to look at, right? Because you and I have been in the financial industry, Matt, for quite a few years, enough to know that, there are bottlenecks, there are challenges, there are hoops to run through to make things a little bit more streamlined, particularly how fast everything is moving. Surely can only be to the benefit. And people say, well, you're taking away a lot of this human element, but I see as many jobs being created off the back of some of the technologies as there are jobs being made redundant, if you follow me. So I don't think that's, I mean, I think in some countries, certainly in the UAE, we've seen that as part of the course for young children going to school, it's compulsory to have coding and software engineering or coding based modules within their school. So that's happening in a lot of countries. That never, when I went to school, you had computing science maybe, but that was even a little bit sparse. It's now becoming a core theme and a core subject alongside maths, English, linguistics and science and others, right? So that's a big shift, and the millennials only see that. So where there's value, I'm interested in it.
And in terms, you mentioned earlier that the CEO of was it JP Morgan had come out and kind of beginning to recognise the challenge that this might present to the banks. Do you foresee the banking industry's kind of, I guess there's always going to be elements of this, but some of it is very stuck in its ways, and potentially it might just get swept aside. Potentially, that's one outcome that could happen, isn't it?
JP Morgan, arguably, depending on the metric, is one of the biggest banks in the world. I've got admiration actually for, a lot of people criticize, but admiration. He's adapting and he's changing the mindset. Might not have believed in it first off, but has realized it. I mean, they've just launched their Onyx their Onyx group, which is, I think it's, from what I hear, and I don't know this is a fact, but from what I hear, there's 100 developers and or practitioners in there working on blockchain based activities and looking at clearance and settlement, looking at payment rails for JP Morgan to be a leader in that space. So as big a bank as they are, and they do operate under the rules and regs of global finance, they're still, fair play to them, they're still seeing the value in exploring and investing in technology. So Morgan Stanley doing a very similar thing. They're backing this in a big way, actually looking to offer Bitcoin through their wealth management business for their clients, right? I mean, this is happening with a lot of the big institutions. Bank of New York Mellon have got RFPs out for custody. These things that, digital asset custody, these things are moving, and I think they realise that it's a shift that they're not going to make a U-turn in this shift. They've got to go along with it to be successful. So yeah, I've seen it quite a lot, and it's positive.
Yeah, no, I agree 100%. I think it's really, really positive. I think the other thing that is, it's one of those things, isn't it, where you kind of evolve or you die fundamentally, because some of the more traditional old school banks that don't evolve, what are you left with? If everybody else is offering these services, and initially it's to the high net worth, but it will gradually trickle down, and there'll be implementation to ordinary consumers and retail investors, etc. I think you'll see that they know that they're missing a trick. I mean, look, Coinbase is about to IPO, and the valuation on that's huge, isn't it? It's a vast business that. And importantly, it makes a shitload of money, doesn't it? You're not just talking about something that's transacts high volumes. It makes money, and that's what counts, right?
Yeah, I think their trading volume, recent reports show that they're their EBITDA is pretty high, right? And they're driving a lot of value. So yeah, I think like we said before, kids that are graduating, young guys and girls that are graduating, are going into and their first thought is around tech companies, right? And how can we go in and work at those companies and not necessarily others? But I think the sort of, let's call it the traditional finance players that are adopting and adapting and moving with this transformation, they're the ones that are going to compete and have the same market share as they've been historically renowned for. So yeah, I see that being huge opportunity for millennials to come in and give their ideas, because let's face it, they know more than us. they're so tech savvy that they'll come and teach mum and dad like how things are going to go in the next 5 to 10 years, and I think that's that's great.
Yeah. That's interesting. That was one of the questions that I was going to ask is, for people that are interested in the space and want to get involved in some way. Obviously, you mentioned the Oxford University program that you went through. Is there any other such things that people can do just to get their kind of beak wet and get involved in some way?
Yeah, I think that, there's more and more of these now. You can, I think online courses is one thing. What I see value is you can do an online course, but obviously, as we're sort of coming out of this pandemic a little bit, in terms of being able to move around a little bit more, going in and getting interaction in groups and running through a project as if it was a real project yourself, similar to you would do in any kind of, educational environment, right? That I think is a very useful thing to do early on. Keep abreast of the latest and greatest that's going on in the news, and seeing where these companies and what these companies do to bring value to consumers. That's the focus, I would say, that helped me.
Cool. And anything else that you think is gonna come out that we maybe not aware of yet in terms of this space? Is there any other murmurings that we should be aware of?
Are you looking for some tips there, Matt? Is that
of course, always?
Yeah. No, look. There's plenty of things out there. I think the one thing that you and I have discussed, there's an interesting play here around staking as a service and looking at how you can perhaps get a bit more yield. But again, if it's unsecured, you've got to be in the right mindset and understand the risk, because these are areas that if you don't know enough about it, you can't secure your assets, and you really got to have an understanding. So yeah, I'd be cautious of that, but yeah, there's some great opportunities. The NFT space is one to be wary of, I think, but again, exciting, right? Because you talk about sports avatars or memorabilia or art paintings or collectible cars and wine. All these things, if they can be done as non-fungible tokens or have a smart contract where you can look at the value, it may bring these markets to life. Not that they're not alive, but they may be open to more participants, right? So I think that's the next one of these asset classes is going to be another shift. There's a real focus on the finance industry right now, in sort of core, equities, bonds, stocks, these types of instruments. But yeah, it's going to move into other, probably more tangible assets in future.
Well, one of the practical applications that I've read about in terms of NFTs is offering football tickets and Formula One tickets and things like that, and concert tickets as NFTs. And so you get a unique identifier, which becomes a kind of practical application for it, which whether it's viable from a financial perspective at the moment, I don't know, but it's those kind of practical applications which in turn, the more transactions that there are on Ethereum and the various networks obviously increase the value of the underlying tokens as well.
Yeah, look, I think a lot of these are very interesting. I think you still don't want to put very fascinating. However, if you're looking through the lens of a regulator, if there's a fractionalized interest in an underlying asset, or there's some kind of in the smart contract for music rights and there's a payout, you've got to make sure that if there's a flow of value, you have to abide by the rules. So I'd be taking some good legal guidance on that and making sure that if you're either getting involved with building a business or investing in one, that the underlying business logic and the underlying where that's going, because there could be a regulatory oversight that you're not quite aware that it's fallen into. So you need to be mindful of that. I think that's an important point to get across. But it's exciting. Yeah, I mean, look at all the basketball players, American football players, soccer or football as it's called in the UK, golf, and all these top players. They're trying to leverage some of this. It's a good brand kind of brand asset enhancement, right, for some of these stars, right, and celebrities, right. I guess but again, bring it down to earth a little bit and make sure that it doesn't get out of control. That's what I'd say. Yeah,
I agree. I mean, personally, it's not a space that I particularly understand, and I've kind of steered clear of it on that basis. I don't get this underlying value in owning a piece of digital art. To me, that just doesn't make any sense. But each to their own. But the bit that I do like, and as you know, we've talked about this, is this yield farming opportunity, which as you touched on a couple of times, is potentially a means of where interest rates are so low, and lots of money is chasing yield and fixed income. There's potentially ways of achieving that through basically lending crypto and borrowing crypto and stuff like that. So for me, that's an area, as you know, that I'm finding increasingly interesting and I'm exploring to some extent. So it'd be maybe we can reconvene on that some other time. But it's certainly an interesting space.
Absolutely.
Cool. Well, Neil, I appreciate your time. I know you're busy, so I won't take up any more of it. If there's any closing remarks that you'd like to add, and also where we can find you, that'd be great.
Yeah, no, I mean, the info@shuttleholdings.com is our address to get in touch via email. But people know us in the space. There's so many ways to get in touch with us these days. I don't know what your Telegram handle is, Matt, but we can certainly share that to viewers at a later date. The things that I'd close on is just that we're seeing obviously this financial infrastructure shift and change, and if you're a part of it, then you want to be learning off some of the guys that have been in this for some time, and hopefully, given our early adoption, and that that's had its ups and downs. Don't get me wrong. Like any new technology, any new business, rolling the sleeves up, digging into the operations, really digging into the detail is sometimes onerous, and you feel like you're up against the wall sometimes. But keep going, believing in what you do, and it typically the hard work does pay off. But we remain compliant and diligent as much as possible in everything that we do, and that would be as an early stage investor or as an early startup company. Tag along with some of the guys that have done it before, and knowledge and wisdom is probably better than dissemination of information, right? If you get guys that have experienced and walked the walk in terms of, VC or startup, or grown a business and exited and sold it and been successful, learn off of these guys, because that's what I did, and that only helps you in your path. So that's what I would say.
Cool. Well, Neil, appreciate your time. Thank you very much, and look forward to catching up for a nice lunch soon.
Absolutely. Thanks, Matt. Take care.
Thanks for listening to The Growth Show with Matt Lenzie. Please like our podcast and subscribe today.